Senior Technology Analyst Anurag Rana, as well as Senior U.S. Retail Analyst Poonam Goyal. And of course, we have both of you to kind of cover the different parts of Amazon's identity, one as a retail giant and the other one as a cloud provider. Anurag, let me start with you here. Just in terms of looking at the numbers, you've been sifting through them as well. What was your takeaway on the cloud business?
Yeah, both slowed down. I mean, the margins were below and the cloud was below expectations. So I was a bit surprised when the stock reacted positively after that. They said things were going to slow down, but it's actually worse than what they had expected. And my gut feeling is consumption has been much slower than that. You have, financial services firms, crypto firms, those are not, as active as before. The overall economy is slowing down and enterprises holding back on tech spending.
And Poonam, let's talk a little bit about the retail side of the business, because again, we're talking about a big business with two sides, but specifically on the retail side, what did you learn there? What's particularly stuck out to you?
Yeah, I think the retail side of the business actually held up for the fourth quarter. If I look at the breakdown, the real big surprise here was the 3P sales up 20%. Very, very strong numbers compared to the 7% that was expected. Online sales, the 1P sales were down 2%, roughly in line with where I think everyone expected them to be. But I would say 4Q was a success for them on the retail side. They did well for the holiday quarter. The one thing that, that we're continuously watching for and we want to hear more on the call is on the cost side. So we all know that, last year or early in last year, $4 billion of added costs were seen. And last quarter, they fell short of their estimate to improve costs by $1.5 billion with just $1 billion. Want to hear more on where they are on the cost savings front. Shipping costs were up 4% in the quarter. So there's still a lot of work to be done on the cost side, whether it's AWS or retail.
Okay, if there's a lot of work to be done on the cost side, do you see Amazon having any room increasing the cost of its Amazon Prime service, for instance?
Well, they just did that, right, this year. So if you follow the patterns, it'll probably be a few years before we get another price increase on the Prime membership. That said, they've done some pretty interesting things as of recent, like Buy with Prime, the official launch of that or extension of that to people who don't typically sell on Amazon and allowing them to tap into their DCs and use them. And basically, Prime members can now pay with Prime. So that's a new business for them. And we think it has a lot of potential to help both on a revenue and a cost side.
And to go back, Anurag, to the cloud side of the business, of course, falling just short of estimates there. But when you think about Microsoft also warning about its own growth, I mean, what does the competitive landscape look like for cloud businesses right now?
So this is going to continue for the next few quarters as the economic activity slows, as companies reduce their overall cost. But in the long run, this is a good thing because it will force enterprises to move more workload to the cloud, because in the end, it saves them cost to move it from a fixed cost structure to a variable cost structure.
Where's the next leg of growth for Amazon going to come from, Anurag?
On the cloud side, it will be hybrid cloud. It will be, big companies that are moving their SAP workloads to the cloud or their legacy footprints, because the cloud-born companies, their usage is not going to drive that massive growth. But we have a very large legacy footprint of old IT, companies like Southwest. They need to figure out how to modernize their portfolio. So that is where the growth is going to come from.
And Poonam, I want to throw you the same question for the retail side. I mean, it feels like Amazon is so omnipresent when it comes to e-commerce websites in that field. But I mean, where is the next avenue that they can really even further expand that footprint?
Yeah, I think for retail, it's really increasing the depth and breadth of what they currently already do. They're pretty much in every business that I can think of already in terms of categories. But there are other businesses that Amazon's quite small in today, but can get really big and have really nice margins, such as advertising and media. So we think those are going to be two big pushes that can eventually, over time, be contributing to the overall profitability, as they do have higher margins.
As we get into 2023 and towards the second half of 2023, for both Poonam and Anurag, I wonder how much the easier comparisons will be a boon to the numbers that they do report, to the top line, to the bottom line. What are you thinking, Anurag?
Yeah, so I mean, a lot depends on when companies start spending back again on technology. We know whether that's the third quarter, fourth quarter, or next year. But it does set all of these companies very well for next year when you have a margin structure that is far more leaner than today, and coupled with that, again, growth coming back, the bottom line really explodes with that.